Today, I want to talk with you about index fund investing. Now, if you listen to a lot of finance channels, index funds, they are the best thing since sliced bread. And who doesn't like sliced bread? I love sliced bread. And while index funds are cool, I do not personally invest in them. So in this video, I'm going to explain why index funds are such a great investment and why I refuse to put my money into them. My name is Lark, and this is where you subscribe for all of the hottest and all of the latest happening out here in the markets. By the way, if you are investing in the stock markets and you want to score yourself 3 free stocks valued up to $1,600 each, then you absolutely should check out Webull. It is a premier stock trading app. Now there is a link down below in the description where you can actually get signed up for Webull and get those sweet, sweet free stocks. So let's dive into this topic. Why are index funds so popular? Well, index funds, they're a super low cost way to invest in a broad range of stocks. With just one click investing in one index fund, you can, for example, get exposure to 500 different stocks in the S&P 500, for example. In fact, these super low fees are a major draw card for index funds since mutual funds have notoriously high fees, and index funds also provide better returns than most fund managers will. Just broadly investing in the market and sitting and waiting does better than most fund managers. In fact, back in 2007, Warren Buffett bet $1 million that index funds would outperform hedge funds over a 10-year period. And guess who was right? Buffett was right. Betting against index funds is betting that you can beat the market. Not many win at that game. Index funds like the S&P 500 on average returns 7 to 9% a year, returns adjusted for inflation, of course, which may not sound like super crazy numbers, man, 7 to 9%. But remember, crypto investors are piling into absolutely useless utility tokens with 5% annual staking rewards on blockchains that have no users, no use cases, and drop by like 90% at the drop of a dime. So, 7 to 9% in that context, not so bad. Now, index funds are also lower risk compared to trying to pick individual stocks because an index fund like the S&P 500 actually represents a huge variety of different sectors. You have food and retail and manufacturing and tech and airlines and real estate and defense and banking and all other kinds of industries just put in there all together. Now, this gives you diversification with one single purchase, because if, for example, retailers do bad, then maybe banking will do well, and gains in one place will offset losses in another place. So in terms of a safe bet investment with steady, good rates of return, index funds are absolutely great. Now, in terms of what index funds to actually buy, to put your money into, if you do want to buy an index fund, well, there's actually just a lot of great options out there. And you're going to need to do some digging to find the options that work best for you. But some of the most popular index funds out there are offered by Schwab, Fidelity, and Vanguard. They all have different options. They all have the top 500 index or some other indexes, top 2000, whatever it might be. So definitely check those out. Those companies have the most reputable index funds. And well, all that sounds cool. You might think, this is great, Lark. I'm not buying index funds at this point in my life. And there are 2 reasons why. The first is lower returns. I'm young. I can still afford to take risks. If you're over 50, then perhaps go the safer index fund route. Don't make those riskier plays. But if you are younger, then perhaps you can actually afford to be a bit more adventurous in your portfolio. Well, you can still invest in index funds. You can also just invest in individual stocks. Just let me give you an example of what I'm talking about here. Now, if you had invested $10,000 into the Vanguard S&P 500 index in 2010, you would have made around a 200% gain. Now, that's awesome. That's a $20,000 profit in 10 years. Cha-ching, baby. Now, if you had invested that same $10,000 into Tesla back in 2010, you would have made a 10,000% gain, and your $10,000 would have turned into $1 million for a total gain of around $990,000, or looked at another way, $970,000 more than putting your money into the index fund. Kind of a big difference there. And while Tesla, obviously, it's a major standout. Tesla's a bit of a unique situation. It's not that unique, though, because at the same time, Amazon had a 2,000% return. Apple had a 1,000% return. Any of those individual stocks massively outperformed the S&P 500 broad index. Personally, I'm interested in high growth stocks. And yeah, I do also have some safer dividend plays in my portfolio, things like Intel or Brookfield Renewables, for example. But it is far more exciting trying to sniff out the next hot electric vehicle player, for example, or just plow some cash into things like the ARK Invest ETFs. They're all focused on high growth innovational sectors like genomics, future internet technology, robotics. That stuff's exciting. It's really exciting stuff. I love it. It's so cool. The next big reason that I do not invest in index funds like the S&P 500, ethics. My own personal ethics. And it's really just, it's a personal thing. And many of you watching, you're going to totally disagree with my reasoning for not investing in these index funds. And that's okay. And yeah, I know. Ethics are messy, and I will inevitably have all variety of hypocrisy in my investments. I know. I'm aware of these things. You can't be perfect, but you can try to be a bit better anyway. A big reason to not hold an index fund like Vanguard's S&P 500 index for me is that I'm ethically opposed to a lot of the companies in that index. Now, they're not all bad companies by any means. In the S&P 500, you're going to find lots of great companies, lots of cool retailers and communications companies and cool tech companies and industrial giants and just lots of other companies that do totally cool things and that I have zero issue with. Good companies, it's all sweet. But in the S&P 500, you're also going to find some companies that I am just not comfortable investing in. You will find 11 defense contractors in the S&P 500. That's an instant no on my part. I am not investing in companies that build bombs to, kill children and countries, whatever, just it's not for me. No. There are about 24 oil companies in the S&P 500. And, you can have your opinion on climate change, but I take it seriously. I take the future of the planet seriously, and I'm not interested in investing in fuel technology of the last century. So oil companies are a big pass for me. I also do not want to own any piece of a criminal bank like JP Morgan. The index has about half a dozen mega banks incorporated into the index funds, so they are basically a who's who of the criminal finance industry, and I have zero interest in owning even a fraction of JP Morgan. I also have no interest in owning companies that make their money by exploiting animals for profit, and there's plenty of those in the S&P 500 index. Every single one of these issues, it's a deal breaker for me. And it's just my personal ethics. It's not a judgment on you. It's not what you should do with your money. It's just what I do with my money and my personal reasoning for not investing in these funds. Anyway, index funds, they're obviously very popular for a reason. It's very attractive. It's a one-click thing. It's safe. It's easy. You throw your money in. You forget about it. The stock market just keep going up. You just keep making money. It's easy. Let those gains slowly build over time. But for the reasons laid out here, index funds are just not for me. But what about you? Are you invested in index funds? And if so, what funds are you invested in? Are you in Vanguard? Are you in Schwab? Are you in Fidelity? Let us know down below in the comment section. Or are you more of an investor who's out there chasing that high growth stuff, looking for those individual stocks, trying to find the next Tesla? Would love to know your answer down below in the comment section. Thank you so much for watching, and peace out till next time.